Hey, this is Tim, licensed loan officer. Welcome to the channel. Today on this video, we're going to talk about, will we see low interest rates again? Thank you so much for watching. And again, I want to welcome you to this channel. This channel is all about helping first-time home buyers, helping people refinance, save money, improve their credit, and level up. All types of financial topics. If you like those type of topics, consider subscribing to this channel. Now, today we're going to talk about mortgage rates. Yes, rates. Whoo, this is a hot topic. Everybody has been trained to focus on interest rates, and I want to talk about it. And I'm going to give you some tools and really educate you with mortgage rates. Now, I want to talk about this before we get into it. Mortgage rates for the last 50 years, if you go back the last 50 years, the average interest rate was right around 6%. Now, with COVID, we had record low interest rates. And that really kind of like changed everything. Because right now, I'm helping people, and people are telling me a 6.5 or a 7. It's like, oh my God, it's so high. But honestly, it's not that high if you look at it from a historical point of view. For example, my parents bought a home 30 years ago and they had a 12% rate. That I think is high, not a 7 or 6. But if you go back 3 years to COVID and you're looking at maybe a 3 to a 6 now, yes, it seems high. It's almost like it was double. So think of that in mind. But remember, the reason why you buy a home is to live in it. You don't buy a home for an interest rate. And if you're an investor, the reason why you buy an investment property is to build wealth. It's to make money, not for the rate. Now, of course, a lower interest rate helps you afford more home. A lower interest rate in investment property makes you make more money, net operating income. So it's very important. You can't ignore the interest rate, but some people act like the interest rate is the only thing that matters. And I've always tell people, buy the home, marry the home, date the rate. You can always refinance the rate. And just to be transparent and honest with you, when I bought my home, my interest rate was 4.5. Okay. Ouch. And I didn't know anything about rates. I wasn't a loan officer at the time. I just wanted a home. I got tired of renting for 8 years. So, and then when COVID hit, I ended up refinancing to a 15-year at 3.125. Okay. And my payment went up a little bit. But let me get into this. I want to show you some tools because a lot of people, they call lenders to ask them their rate. I get phone calls. What's your rate? I'm thinking when you call a lender or contact a lender, you should be ready to apply. And what I mean by ready to apply, have us run your credit, have us get your income docs, and qualify you, get you pre-approved. Not just to know the rate. But I understand that some people don't know that. But I'm going to give you some tools and links to help you where you don't have to call lenders. You can kind of do some of that on your own. And then when you select your 1 or 2 lenders, I recommend always have at least 2 lenders because you want to compare rates because rates really vary among lenders. So let me share my computer screen here and then we will get into it. Voila, here we go. So this is called Mortgage Daily Rates. And I like this because it gives you the average rates that lenders are actually charging by survey, okay, by survey. And right now, as we're recording this, August 11th, 2024, you can get a 30-year fix for 6.54. Now, normally that would be 6.5. I don't know why it's 5.4. It's just the average. And a 15-year right around 6%. A jumbo is 6.73. I never understand why jumbo are actually higher rates than a non-jumbo. And then an ARM, 6.39. As you see, it really doesn't make much sense to get an ARM in this market. you might as well just pay a little bit higher and get a fixed rate and not worry about that. And then FHA, 6.5. Now remember, FHA does have a little bit of mortgage insurance. FHA is a great loan. It carries lower rates, but it has a little bit of mortgage insurance. And then conventional does not have mortgage insurance if you put 20% down. And then VA, no mortgage insurance, great loans, 610. Now, the Federal Reserve is meeting next month in September. And there's like more than a 90% chance that they're going to lower rates, okay? And my prediction, and I'm on record saying this, I think the rate is going to be around 5.6. I think that's where they're going to have it at. Like it's going to go down about 1 point. Only because the most recent job report that came out had us losing jobs. Not losing jobs, but the jobs creation was less than expected. So what that means that they hired rates to cool off the market, because our economy is driven off of people borrowing money. So when you're trying to bring prices down, you higher rates to discourage borrowing. Like the cost of money right now is expensive, like credit cards, auto loans, everything. So they're going to lower that to stimulate the economy a little bit, get some job creation. Companies borrow money. Everyone borrows money in America. It takes money to make money. Now you can go to daily mortgage rates. I'll put this link below. And just compare this to what you're being offered, whether it's a purchase or refinance. But also keep in mind that there are different rates. There's a different rate from a cash out rate. A cash out rate is higher than a lower payment rate. A purchase rate is lower than a cash out rate. So it's a little bit different rates. But I always recommend that you talk to at least 2 lenders. Have 2 lenders run your credit. Have 2 lenders you apply with. And then you review the loan estimate. Now, you also can go to Google. Google's great too. What I like about Google is that you can put in your loan amount, how much you're putting down, your state, and then your credit range. Now, this just gives you an idea of what your rate will be. Remember, lenders may have a little bit different rate. And this is where you don't have to call lenders. You can kind of just vary it. So you see here, it has a 7.3. Now, you may say, Tim, why is this a 7.3 and over here it's a 6.54? And I'll explain that. Now, normally there's a rate that you don't have to pay any extra cost for. And then if you pay a little extra cost, we call that discount points or buying down the rate. So you pay a little bit of points and get a lower rate. That's how that works. So lenders will advertise low rates, but they're not free. They're going to charge you for those rates, okay? Keep that in mind. A lot of people don't know that. You want a lower rate, you're going to pay for it. You also can go over here to NerdWallet. And NerdWallet, same thing. A lot of them already have the default 20% in the 720. That's kind of the sweet spot. You want to be at least a 700 or 720. You get, pretty good terms. In the mortgage world, usually 740 is considered excellent. See, excellent 740. And then 760 is like more excellent, I guess. But these online lenders will say this like, oh, I'm going to give you a 6.629. You're only going to pay $187 in fees. That's normally not the case. That costs to be a little bit more. So take this with a grain of salt. But they do the best they can to honor this. The goal of these lenders is really to get you to call in and have you apply. And look, it's 7.5 with $1,500 in cost. But you can always go to here and type in your information and get a good ballpark. Another thing I look at too, it's called the 10-year treasury. The 10-year treasury is basically related to rates. It affects mortgage rates. So as you see down here, this is COVID right here. See how low these were? These were historic rates. And then it really jumped right around here. Well, actually, it jumped here about in 2022. It really jumped. See, they doubled. But as you can see now, they kind of peaked up here. See, it peaked. And it peaked here, and now it's coming down. See that? So it's coming down. It should come down a little bit more next month. So that's a little bit about rates. Like I said, I'll put these links down below. Check out these links. If you have questions, drop me a comment. Give me a thumbs up. But like I said, I'm predicting that rates will probably go down next month with the Federal Reserve, but no one has a crystal ball. But again, don't let an interest rate stop you from buying a home. Don't let it discourage you. At the end of the day, it is about your payment. Again, if you like this video, like, share, subscribe. I love to have you here. I'll see you again on the next video. Thanks.